Next, we're going to move on to non-qualified stock options and how they are taxed. There is no tax implications at grant or vesting. At exercise, you will recognize or realize ordinary income. You will also have payroll tax withholdings, and you have the potential for state and additional Medicare tax. These taxes will be on what's known as the compensation element. So this is the value of the stock at exercise less the strike price multiplied by the number of shares you exercise. That is what you will be taxed on. That federal income tax will have very similar ramifications as restricted stock, and it will be at those statutory rates. There's also going to be Medicare tax, Social Security, and there may be more surtax that applies. Once you've exercised non-qualified stock options, you really have two options here for what to do with those exercise shares. You do have more, but for simplicity's sake, we'll just focus on these two. You can exercise and hold, or you can exercise and sell. If you decide to exercise and hold, any gain after exercise will be based on your cost basis. So the price you paid for the stock plus the compensation element. That's roughly the fair market value on the date of exercise. The determination for whether it is a short or long-term gain just depends on how long you hold the shares after the exercise date. There may also be a 3.8% Medicare tax on those realized gains on the date of sale. So just keep that in mind, that there may be additional tax implications based on how much you sell and how many or how much more realized gains you have in that tax year. If you decide to do an exercise and sell, there are no additional immediate taxation implications here, because you don't have an opportunity for realized gains to build up, because you're simply exercising and then immediately selling. It's important to note that the payroll tax withheld may not be enough to cover taxes owed. So do keep that in mind, that when it comes time to make an estimated payment or at year end, you may owe more to the IRS.